I told you that it might be sitting on, let's say, $50,000 to $100,000 more in equity than you think, or possibly less, would you want to know the truth? Most homeowners across Lake, McHenry, and Northern Cook counties have no idea what their home is actually worth in today's market. And that lack of knowledge could be costing them real money, causing them to miss incredible opportunities. I'm Mike Blake, real estate advisor, licensed broker, and Marine Corps veteran with Baird&Warner. I specialize in the northern and northwestern suburbs of Chicago, communities like Inverness, Libertyville, Arlington Heights, Crystal Lake, Lake Zurich, Palatine, Barrington, Cary, Grace Lake. You get the idea. Pretty much everywhere in between. Over the next 4 videos, probably about 10 minutes each, I know, but I promise you it's going to be worthwhile information. I'm going to show you why understanding your home's true equity matters, why the numbers you're seeing online are probably wrong, how you can get accurate information, and what you can actually do with that equity knowledge. Let's start with the most important question. Why should you even care? Here's what I constantly see. Homeowners check their 401k quarterly, maybe even check their stock portfolio daily, but their largest single asset? I think it's probably worth about what we paid for it, maybe some appreciation as well. A little bit of a reality check. For most American families, 60 to 70% of their net worth is tied up in their home equity. Yet it's the one investment they pay the least attention to. Would you ignore 60% of your retirement portfolio? Of course not. I get it. A house is more than an investment, obviously. It's where you live, where your kids grew up, where you have memories. There are emotional factors, family factors, job factors, and social factors. But that doesn't mean your home should be a black hole when it comes to understanding its financial value. Now, I'm going to show you 2 real-life examples. Obviously, the information has been changed for privacy, so I'm not sharing the details of the clients nor their actual home address for this, but these are real-life scenarios that occurred. Homeowner in Lake Zurich bought in 2019 for $485,000. They assumed roughly 3 to 4% annual appreciation over the years. Their mental math, probably worth about $560,000 today. Actual current market value based on recent comparable sales for their home, $625,000. That's right. It's a $65,000 difference they didn't know existed. Let's go to a second check. Sometimes it's not always positive. It doesn't always go that direction. Different homeowner in Arlington Heights bought during the peak of the market in 2022 for $575,000. Expected continued appreciation, probably $600,000 now. Well, the actual value after market adjustment, it's about $540,000 right now. And that's a $60,000 gap in the other direction. So what's the point? In both cases, these homeowners were making assumptions. And assumptions in real estate can cost you either missed opportunities or unrealistic expectations. Let me show you something that might surprise you. Using data from the Federal Housing Finance Agency's All Transactions House Price Index from 2020 to 2025, Lake County, Illinois, homes increased an average of 44.22% value. McHenry County, Illinois, 49.12% increase. Cook County overall was about 34.13%. But when you break that down to Northern Cook County, where many of you live, it's closer to 46%. What does this mean? Well, let's make it real. If you bought a home in 2020, in Lake County, for instance, a $400,000 home is now worth approximately $577,000. That equals $177,000 in equity growth. McHenry County, same thing. $450,000 home is now worth approximately $671,000. That's $221,000 in equity growth. Northern Cook County example, $500,000 home is now worth approximately $730,000. That equals $230,000 in equity growth. And I need to emphasize this. That's before accounting for any principal that you've paid down on your mortgage. So here's the reality. Most homeowners I talk to, whether they're in Inverness, Libertyville, Crystal Lake, or Palatine, or any of the other places I talked about, have significantly more equity than they realize. They're just not paying attention to it. So the flexibility factor, as I like to call it, here's what most people don't realize. Depending on your reasons for potentially moving, you often have more flexibility than you think. Here's just questions to consider. Do we sell now or wait a year or two? The real estate market is constantly changing. Current value, current equity, cost of months of additional interest payments, opportunity to maximize equity, all of this should factor into your decision making. So let's talk about a couple of real life scenarios. Scenario one, the job opportunity. Maybe you got a job offer in another state. You're thinking eventually you'll move. But what if the market is peaking now and you can maximize your equity? Waiting a year could cost you $30,000 to $50,000 in peak value. Scenario two, the education decision. Your daughter got into Northwestern University, that is. Could you tap your home equity for a tuition instead of taking high interest student loans? The difference between 8% Parent Plus loan and the 7% home equity line of credit on $100,000 over 10 years, about $10,000. Scenario three, a debt burden. Maybe you're carrying credit card debt at, let's say, 18 to 22%. You're sitting on $200,000 in equity at a potentially 6.5% to 7% rate. You could eliminate that high interest debt and save thousands per year. Or the right sizing moments. There's really two, downsizing, upsizing. So let's talk about the downsizing. Kids are grown. House feels too big. You're thinking about downsizing someday. What if someday should be today based on current market conditions? Or the other side, you want to start a family. You feel your house is too small. Your parent needs full-time care and you'd love to have them around the grandkids. It'd be really nice for your kids to not share a room. I mean, how many households would you resolve? So let's talk about the value of knowledge. Even if you have zero intention of selling, there are other reasons to understand your equity. We already talked a little bit about them. One of them, home equity line of credit, or HELOC, which I'll refer to it from now on, as a financial safety net. It's better than depleting your savings or retirement accounts in an emergency, especially with the tax burden on those retirement accounts and pulling money out of it. Strategic reinvestment. Reinvest in your home to increase its value. A kitchen remodel, a bathroom update, finished basement. Strategic improvements that pay back more than they cost. Additional property purchases. Maybe you want a vacation home up north or a second home in a warmer state. Or you're interested in investment property. Your home equity can be the down payment on that. Debt consolidation or elimination. High interest credit cards, car loans, personal loans. Converting to lower rate home equity debt is a smart move. Some critical conversations with professionals. Let's start with your financial advisor. Your financial advisor needs accurate asset values for your wealth plan. If they think your home is worth $500,000, but it's actually worth $650,000, your entire financial picture is wrong. This affects retirement planning, estate planning, investment allocation. They can't give you good advice with bad data. Let's also talk about your insurance agent. This is one that most people don't think about. What if something tragic happened? Is your homeowner's insurance coverage enough to rebuild your home to its current state? If your home is appreciated 45%, but your coverage hasn't increased, you're underinsured. You want to make sure, heaven forbid something happens, you'd have enough coverage to rebuild to a comparable state. And add to that, when you take into consideration the cost of construction material and new materials, which the U.S. Bureau of Labor Statistics Producer Price Index for construction inputs states has gone up over 40% in that same 2020 to 2025 time period, there's a strong chance the policyholders are at risk if something were to happen resulting in loss, especially a total loss. A home that could be completely rebuilt for $1 million in 2020 would cost approximately $1.4 to $1.5 million now. That is quite a gap. All right, so the cost of not knowing. Maybe rates dropped and you had enough equity to eliminate PMI. That's a mystery financing opportunity. That's $100 to $200 a month that you're still paying unnecessarily. Missed selling windows, market's peak and valley. If you were planning to sell eventually and miss the peak, that's real money left on the table. Overpaying for your next purchase. If you don't know your true selling power, you might be looking at homes well below what you can actually afford. Or worse, on the other hand, stretching for homes above what you should. Missed debt relief opportunities. This is a real life example that did happen. I had a client that discovered they had enough home equity to eliminate $40,000 in high interest debt. They had no idea. They'd been paying 20% interest for years while sitting on an accessible equity at 7%. That's thousands of dollars in unnecessary interest that they paid and are no longer paying. Let's do a quick recap. Here's what we've covered in this first video. Your home is likely your largest investment. Treat it like one. Across Lake, McHenry, and Northern Cook counties, homes have appreciated 44 to 49% in the last 5 years. Most homeowners have significantly more equity than they realize, especially if they purchased in 2020 or prior. Whether you're planning to sell, refinance, reinvest, or just want accurate information for your financial planning, you need to know your true equity. Not knowing is costing you opportunities and potentially money. Now, I know what all of you are thinking. Mike, I do check my home value. I look at Zillow every few months. In the next video, I'm going to show you why that's a problem. Why sites like Zillow, Realtor.com, Homes.com, and Redfin, and other real estate websites, while better than nothing, are not the answer, and why their estimates can be off by $50,000 to $100,000 or more. So please make sure you've subscribed so you don't miss video 2. Drop a comment below. I'd love to hear what surprised you most about the equity growth numbers we've been seeing in this area. And if you found this valuable, please share it with your friends who own homes. Yes, in the northern and northwestern suburbs, but also anywhere else. While that may be where I personally operate, this is information everybody should know. Thanks for watching, and I'll see you in video 2.